market news now. Shares in Asia Pacific region slipped as investors reacted to the release of Chinese economic data. A private survey released yesterday showed Chinese factory activity growth slowing in June. When we look at what happened on the mainland side of things, Chinese stocks closed lower as the Shanghai Composite declined fractionally and the Shenzhen component slipped 0.8%. Elsewhere, the Nikkei in Japan shared 0.2%. Markets in Hong Kong were closed for a holiday. Looking at what's happening on the European side, markets advanced, kicking off the second half of the year on a positive note as investors anticipate the continent's economic recovery. U.S. stock futures at this point trading higher in pre-market trade. To get into the themes of the week so far, global themes as well, we are joined by Matiti Tulare, who is head of FX execution at RMB. Matiti, thank you so much for your time. Let's get into the JSE. What do you make of the trading day so far?
Hi, Tasha. Look, it's been a bit of a disappointing start to the July trading session. I mean, with the early rally that we had this morning, that faded very quickly, and the JSE has traded flat as at midday. But, I think when you just look at the resources sector, that's enjoying broad-based gains. After a very torrid performance in the month of June, we have seen the likes of Sasol up about 2% after, Brent rallying above $75 a barrel. Platinum is also about 1.8% up as the platinum price moves higher.
Right. Let's build on that. I mean, you used the descriptive word torrid. We just started a new month. It's July. We're 6 months in. How would you characterize the first half of the year?
So, look, I think from a JSE perspective, if you just look at the performance that it's returned over the past 6 months, that's about 11%. And I mean, if you just look at inflation numbers on a relative basis, that's about 4 to 5%. So I think, on a net basis, if you are invested, it has done well, but there has been a lot of volatility. I mean, we have seen even the likes of the Rand getting to around 1340 levels. We have seen even gold, receding from that $2,000, per ounce level. But also, I think the volatilities around what's really happening from a global front with regards to COVID, with regards to what's happening with the Fed. We've also seen, just from a local perspective, that as much as we try and downplay some of, the negative events and obviously not even look at some of the positive events, I think there has been quite a lot of positives over the past few months from a South African perspective, where we've seen substantial improvement in South Africa's, fiscal sustainability. Growth has accelerated faster than expected. There's also been a substantial revenue overrun in the past fiscal year. And obviously, I think the other key sticky issue is the fact that government is, sticking to its fiscal restraints in terms of wage negotiations. And also, we have seen the ratings agencies also not giving us a downgrade. So I think all in all, it's been quite a positive past 6 months, despite all the doom and gloom around COVID.
Speaking of that, then, what's the global mood right now and how cautious are you?
So, look, I think if you just look at, the past couple of weeks, I think the Rand has been the outperformer in the emerging market basket, despite the weakness that we've seen in the month of June. On a year-to-date basis, that is up, about 3 to 5%. And over the past 12 months, the Rand is still the best performing emerging market currency, having returned about 21%. Fundamentals, even locally, as I said earlier, they have improved. We've even seen foreigners being net buyers of bonds. And also from a precious metals perspective, that's also stabilized. And even yesterday's SA trade data, that showed the third huge 50 billion surplus that we've seen. And obviously, on top of that, we've even seen global risk on as S&P made 5 days and 5 quarters of gains. And also, I mean, just from a U.S. employment perspective, the strong ADP employment numbers we saw yesterday, that suggests that potentially tomorrow's payrolls figure could also be strong. And that could also mean a stronger dollar, which is a risk to emerging market currencies. And hence, we've even seen the likes of the euro dollar touching around that 1.1850 area. But I think, the one thing even that's even adding a bit of pressure from a global mood is obviously that already emerging markets are under pressure as worries are now over the Delta variant spread that is growing. And I think that's also going to be a lingering theme in the markets for the next few months.
Right. You mentioned the non-farm payrolls. Any other risk events that could affect different asset classes? Perhaps give us one that you are keeping an eye on.
Look, it's quite difficult to pinpoint one at the moment. I think, if you look at it, the outlook for markets over the next while is going to be really uncertain. And we've assumed that markets will whipsaw over the next 6 to 12 months as obviously that global sentiment facilitates between COVID-19 fears, inflation risks, vaccination hopes. And I think just from a global front, it's about what does the Fed do? What do the Fed speeches and the minutes and the guidance from the Fed, what happens there? Because now already we've seen them talking about hiking interest rates for the first time, in the latter part of 2023.
Yeah.
And I think it's also about how global markets even recover from the coronavirus, the vaccinations programs that are going on globally, what the growth forecasts from the different countries look like.
Right.
And also from a local perspective, I think you also look at what's happening with regards to the state-owned enterprises and the reforms that are going there. I think also in the latter part of this year, we've also got the ratings agencies coming on board again. And obviously, I think the presidential campaign in terms of trying to also get further FDI into the country, that is also something that we're going to be looking at. So there's quite a lot of things that we are looking at for the next 6 months of 2021.
All right, Matete, thank you so much for your time. That is Matete Tulare, who is the head of FX execution at RMB. We're going to take a quick break, and when we come back, we have the labor force with Mbongeni Moto.